Okay. I would like to present regarding our group assignment on topic tax planning. I will explain for question A, which is the possibility of merger of ZH and well under one company. State your argument for treating the manufacturing and distribution of biscuit as a single sources as well as to spread sources of a business. Take the tax implication for both cases. Okay, let me show my answer for this question. For single sources, since well is given the exclusive right to sell brand wine biscuit from ZH, because well to be its marketing and distribution from the distribution arm of its product, and both ZH and well are related company, so the business of well take over by ZH can be treated single business sources. The tax implication, the unabsorbed capital allowance of 700,000 and unabsorbed losses of 500,000 can be utilized into the profitable business of well. Okay, if ZH two separate sources between well and ZH, it will result in substantial tax losses in ZH being a permanent loss when the company is liquidated, and any unabsorbed capital allowance will be lost. Also, current year loss for Y 2019 will be permanent loss. So subsidiaries include for utilize the unabsorbed tax losses of ZH company, ZH may charge management fees to all its subsidiaries, including well, at an arm's length basis. From the implement, well will be allowed for deduction against its income from business sources, because it is wholly and exclusively incurred in the production of income. Okay, next question is for question B, which is leasing or outright purchase of asset by ZH. Choose the best option and give reason. So for this question, we choose leasing of asset as best option for ZH. Compared to outright purchase of asset, the claim of lease rental would give more advantages, because ZH allow to deduct the full amount of lease rental in the year of incurred. Also ZH is able to recover the full cost of leasing in a shorter period as compared to claiming capital allowance. Next, the current year business loss of ZH would be allowed to shelter other income in that current year at the aggregate income level, because ZH has a current year business loss which is 300,000 ringgit, that leasing charge would increase the adjusted loss. That's all from me. Thank you.
Interest restriction for ZH Sdn Bhd financial institution and Profound Sdn Bhd. According to Section 33 Sub 2 of Income Tax Act 1967, the taxpayer who has borrowed money for the purpose of producing business income, the deductibility of interest paid on borrowed money will be restricted. The amount of interest restricted is based on the formula where investment divide with borrowing times interest expense. The excess interest expense cannot be carried forward, and it will be a permanent loss if the restricted interest cannot be offset against the income of the related investment. Fund for construction of the 5 blocks of the apartment is internally generated. This is because the loan given to Province Remberhard is borrowed from the financial institution, which is ZX Remberhard should pay an interest market rate of 10%, which is higher than the amount of interest rate charged by ZX to Province, which is 6%. Therefore, ZX Remberhard should charge interest on Province Remberhard higher than 6% to offset the interest expense suffered to ensure full deductibility of interest expense. In order to solve the issue of interest restriction, the company needs to evaluate interest charge annually for cheaper funding and dispose of investment that are not profitability to pay off loans at a high cost of the fund. Using a high interest rate, it will reduce tax liability for both companies. This is because Profile use borrowing money for the business use. Therefore, as long as Profile used for the business purpose, no restriction at all.
Now, I will present question D for the tax planning on disposal of the fixed assets. The first one is disposal of machine. The machine are expected to be disposed and will give a huge loss due to the low resale value. When the residual expenditure is higher than sales proceed, then the balancing allowance will arise. Therefore, ZX and Remberhard should dispose the machineries at the end of the year rather than the following year to acquire the balancing allowance in order to protect the adjusted income. ZX can choose whether to dispose the asset to its subsidiaries, which is Rainis and Remberhard, or to the unrelated company. If ZX decides to transfer the asset to Rainis and Remberhard, then it will be classified as control transfer because ZX have 100% of shares in Rainis and Remberhard, which is more than 50% to be eligible for this provision. The assets would be deemed transferred at the residual expenditure and the disposal value will be ignored. Hence, ZX will not incur any balancing charge or balancing allowance arising from this transaction. Raini is entitled to claim annual allowance based on the original acquisition but only restricted to the residual value from the assets transferred. Meanwhile, if ZX decide to transfer its asset to an unrelated company, ZX will incur any balancing allowance or balancing charge depending on the sales proceed that have been agreed. Therefore, the best option for ZX is to transfer its asset to its subsidiary, which is Rainis and Remberhard, because the controlled transfer transaction will give benefit to ZX. Next is for disposal of lorries. The lorries are bought in 2018 in January, and ZX planned to dispose it on 50th December 2019. As we can see, the disposal of the lorries is within 2 years of its acquisition date. Therefore, the tax authority can claw back the capital allowance claimed by the company in the previous year and will be treated as balancing charge in the year of 2019. So, the tax planning is in order to avoid the clawback of the capital allowance, ZX and Remberhard needs to ensure that its timing of disposal is at least 2 years of its ownership of its lorry.
Next, I will present about question E, which is group relief or loss. Group relief or loss has been imposed from the year of assessment 2009, which allows a company who suffered losses to surrender their losses to its related company within a group. The amount to be surrendered is only restricted to 70%, and any amount which is not being surrendered in that year will be carried forward for the next year of assessment as unabsorbed business loss. A according to this question, Zack Sdn Bhd, Rainy Sdn Bhd, and Profound Sdn Bhd suffered losses for the year of assessment 2019 amounting to 300,000 ringgit, 600,000 ringgit, and 200,000 ringgit, respectively. So they may surrender their losses to its related party, which is Well Sdn Bhd, because Well has forecasted aggregate income amounting to 1 million ringgit. But all of these companies must meet the conditions to be eligible for this relief. The conditions are both claimant and surrendering companies are resident and incorporated in Malaysia. Second one is claimant and surrendering companies each have a paid up capital over 2.5 million ringgit at the beginning of the basis period. The third one is the claimant must have aggregate income for that year. The fourth one is the claimant and surrendering companies must have the same accounting period, which is 12 months. Number 5, the claimant and surrendering companies must not enjoying certain incentive. Number 6, the claimant and surrendering companies are related parties. And the last one is both companies must be subjected to tax at full, which is 24%. According to this question, Profound Sdn Bhd is currently enjoying investment tax allowance. So, Profound is not eligible for this relief because they does not meet the fourth condition, which is the claimant and the surrendering companies not enjoying certain incentive. This is the calculation of the surrendered losses by Zack and Rainy to its claimant companies, which is Well Sdn Bhd.
And this is the whole computation for Zack, Rainy, Well, and Profound Sdn Bhd. Well Sdn Bhd is the only claimant company which will claim the losses from the surrendering company, which is Zack and Rainy Sdn Bhd. Meanwhile, Profound Sdn Bhd is not eligible to surrender its 200,000 current year loss. In arriving at the defined aggregate income, Well will less the loss claim, which is 630,000 ringgit, to get the chargeable income, which will be subjected to 24% tax rate.
Next, I will explain about question F, that we need to choose between share acquisition or acquiring business asset, which is the best method and its tax implication. Before that, I will explain about these two methods first. The first method is acquisition by share. In acquisition by share, the tax attributes such as an absence of tax loss or tax incentive remain with Zack Sdn Bhd. If Zack Sdn Bhd suffer loss for the upcoming years, they are unable to carry forward their 7 years of their accumulated tax losses and unutilized capital allowance to be set off against their future business income. In addition, the cessation of the company operation for several years still can utilize the accumulated loss and unabsorbed of capital allowance to be set off against new company income. The transfer of share will be taxable because it is capital in nature. Lastly, in financing of share acquisition, interest expense is subject to interest restrictions as loan is used for investment purpose. The second method is acquisition by business asset. In asset purchase, any tax attributes such as an absence of tax loss and tax incentive remain with Zack Sdn Bhd and may not be transferred to the Zack Sdn Bhd. In general, an absence of tax losses and capital allowance of Zack Sdn Bhd may not be transferred to the Zack Sdn Bhd in acquisition. Under the asset deals, any tax incentive or exemption currently enjoyed by the Zack Sdn Bhd will unlikely to be transferred to the acquiring company, which is Zack Sdn Bhd. However, Zack Sdn Bhd need to submit a new application for tax incentive or exemption after obtaining the business if is eligible. Lastly, in financing of business asset acquisition, interest incurred on funds used to acquire a business needed to be fully tax deductible as the loan is used for the business purpose. So, as the conclusion, the best method for acquiring Zack Sdn Bhd is by business asset acquisition.
So that's all from us. Thank you.